Everybody, it's a stable lad coming at you again on another weekly update. It's Friday, and I just did a sort of full portfolio review. So this is my weekly update on some of the changes that I've made to the portfolio. As you can see here, I will go through it, as well as some of the things that I'm just sort of looking at. And there's I added some new positions here that I'm going to talk about in this video. I had about $4,000 or so cash in this portfolio that was just sitting in cash. So the portfolio is now, this portfolio is this public-facing portfolio that I share is about 20,000, a little over 20,000 in there. And I had 4,000 that was sitting in cash that I've been thinking about what to do. I've been mentioning it the last, I think, couple of videos, couple of weekly updates, what I'm going to do with it. And I haven't figured it out until today. And I'm really excited to talk about what I'm doing over there, and we'll get into that. But first things first, let's just kind of go through a high glance of the portfolio. I didn't really make too many changes here. I kept most things the same. The only things that I changed here was this position here, this Arbitrum position on gains. I don't really love the gains protocol. It's fine, but I hate protocols that sort of really lock you in into positions. And Gains has this 3-day withdrawal position where you have to like initiate a withdrawal. Then you've got to wait a couple of days until a couple of epochs later or something like that. And then if you miss the withdrawal period, then you have to redo the entire thing all over again. And I just really don't like that. So I decided to finally move things out. Also, it helps that the APY on this position dropped to 4.25%, one of my lowest positions that I had. So I decided to move it out, and I put $1,000 over into the auto protocol, which was called Tokemak. I did a deep dive on Tokemak a couple of weeks ago, and it's now rebranded to the name Auto because they've got these really cool auto pools that they put money into, and it's paying 16.37%. So I did that, and I'll show you. I'm just going to do a high level here, and then I'll show you kind of a little bit more deeply in there what I've done. The next sort of change that I did here was I initiated this. This is another one. We talked about gains just a second ago. This is another one that the APY, it goes up and down every week. This week it'll be 6%. Next week it'll be 10%. And I'll be like, oh, maybe I should keep it in here. But I decided to put in to do the withdrawal. So I initiated the withdrawal, and in a couple of days I'll be able to remove it out if I don't happen to just forget that day and have to redo the whole thing over again. But my goal here is just to remove money from gains and to put it somewhere else. And I'll explain also portfolio-wise what I'm doing and thinking of. Also, additionally, just sort of high-level thinking here. Polygon, I really just haven't been happy with what I've got on Polygon here. And you can see here, I mean, Fluid is my highest paying position here on the Polygon blockchain. And I've mentioned over the weeks that I do think that Polygon will start to put a lot more rewards towards DeFi if the bull market continues. Right now we're having a little dip in that market, but if the bull market sort of extends to the fourth quarter and into the first quarter of 2026, I do expect Polygon to start putting more rewards into it. And I that would mean that DeFi starts to grow a lot on that chain. And that's why I've kept a small amount of money. It's basically $2,000 over there. But if I'm not seeing any changes by next week, I'm going to start to move this entire Polygon portfolio out of there and then reassess later. But I'm just not happy with that part of the portfolio over here. The next thing that I changed was I moved some money out of Stablejack over here, which was a super high risk position. It was just a small position. I put it over here into Aave, into a low risk position. Aave is paying 38% right now on this USDC position. I don't think it's going to stay, but I moved it from a high risk to a low risk, and I'll just briefly explain why here. My portfolio here mix right here, my targets, 50% in low risk, 30% in medium risk, and 20% in high risk. I'm way underweight on low. I'm 5%, almost 6% over in the medium, and I'm almost 6% over in the high as well. So I need to start to readjust this portfolio to fit into my risk parameters better, and I'm going to be starting to work on that this next coming week. Let's take a quick pause. If you'd like a simple reference guide that shows you how I think about building a stablecoin portfolio, from risk tiers to position sizing, and even how insurance fits in, I put together a free guide you can download. It's the same framework that I use myself, designed to keep things steady and easy to follow at a glance. The link's right below this video. Grab the guide, and while you're there, make sure you're subscribed so you don't miss the weekly updates I share on how I'm adjusting my own portfolio. All right, let's get back to it. So let's go over here to some of the things that I've done. So here's one of the auto pools on Arbitrum. This is paying 16.4% here, and you can see the base rate is 13% on Tokemak, which is really healthy for a USDC position here. And you can see exactly what they're doing here in the destinations. They've got some in Morpho, they've got some in Balancer, they've got some here in Fluid, and so they've got 10 other destinations. You can see the entire mix here. But I really love what Tokemak, now called Auto, is doing. And also they're paying additional 3.31% in Toka rewards. So this is their Toka token. And at this point in the market, I might actually hold it because I just really like the Toka, this Auto protocol. But if not, I may decide just to sell it as I get it and compound these positions. But either way, when you put money into this position, you deposit it in, and then it gives you the option to stake it. And then once you stake it, you get this additional 3.31%, and you could unstake it really quickly and easily without any sort of holding periods, which I really again like. Another one of the things that one of the positions that I've really just liked, and I just wanted to point it out because it's a really good position on Balancer, is this pool on Balancer, USDC, USDT, and Go. It's not a huge position that I've got. It's less than 5% of this portfolio here that I'm sharing, but the yield's great. It's 21% here, and it's been consistent. It's been doing really well. So just dropped down to 15% as I'm talking, but like 15 to 20%. Really happy with this position. I just think it's a good one for the portfolio. Another one that I'm happy with on Arbitrum, you can take a look. We'll take a look here just on the Arbitrum here. This autopilot pool on Harvest Finance is paying almost 15%. Really happy with it. But you could see a bunch of other ones here, like this Morpho Capital paying 14.27%. This Silo paying 20.88%. This other one, this other Morpho pool paying 15%. Like there are a ton of different opportunities on Harvest. Harvest is a medium risk protocol for me, and because each of these are siloed into their own vault, they each stand alone. So you could, I would consider putting a little bit of money in this one, a little bit of money in that one, a little bit of money in that one, etc. So that's some of the things I'm just kind of looking at and considering. And you can also take a look at, I'll take a look at Polygon. So Polygon's got this USDE on compound, and it's paying 14.15%. So again, if I keep my money on I keep my money on Polygon, this is one of the positions that I'll probably move it over to. And then we could take a look at Base as well, and Base had some nice APYs here. USDC paying 18.818%, USDS. This is a Moonwell position paying 16.76%, another one paying 15.5%. So again, really good stuff from Harvest right now, and I'm taking a look at all these possibly going to start to reconfigure some of the portfolio as I move into some of those, as I rebalance the portfolio a little bit in the coming weeks. The next big thing that we can talk about here is let's go over here to Wasabi. And Wasabi is on the Base blockchain, and they're paying 15.82% right now. This is a high risk one for me, so I wouldn't put more than 2.5% of the portfolio into a position here. But again, really healthy APY, and it's been consistent over the last couple of weeks. So really happy with that. And then the last thing I'll mention again, Tokemak, which has rebranded to Auto. I'm really happy with the position here. I've had it for a couple of weeks now, and you can see they're paying almost 10% base rate and then almost 5% additional rewards, Toka rewards that I'm just going to resell and then compound this position. Really loving what's happening on this blockchain. And again, I did a deep dive on this. I'll link to it in the show notes here. I did a deep dive a couple weeks ago on Tokemak, which again is being rebranded as Auto, but really happy with those two positions on this. And I'm excited to see kind of how they progress and how they keep building and expanding on different blockchains. The next thing that I want to talk about is what I did with that $4,000 that had been undeployed up until now. And I basically deployed every single penny of that over to the Plasma blockchain. The Plasma blockchain is essentially a blockchain that was built to support stablecoins, and it's not Tether's blockchain necessarily, but the CEO of Tether and Tether itself has supported the building out of this blockchain. And so, the whole argument is that you have blockchains that support stablecoins, Ethereum being the big one, Tron maybe being number two, but that there was no blockchain built to support stablecoins like really as its goal and its primary goal. And so Plasma is that chain. The Plasma blockchain is trying to grow really, really quickly, and they've exploded in TVL. They've got like billions of dollars in TVL in the last few days over in this blockchain, and they're paying incredible APYs. You can see here, here's my APYs here, probably averaging almost 20% on these here. And so I decided to move money over there, and I'm going to keep exploring this blockchain, and I'm going to continue to see what it's offering as time goes on. I expect the APYs to stay high, maybe not quite this high, but I expect them to stay high for a while as they continue to sort of reward users for putting money over in that blockchain. And we'll take a look here. One of the things to note about the Plasma blockchain is you need Plasma. This XPL, also known as Plasma, is their gas token. And you need to buy this token if you want to do things on the blockchain. Now, technically, you can use Tether, USDT, for a lot of gas, but it doesn't work everywhere. So you kind of really need this XPL, but you don't really need a lot of it. You just need a little bit of it because transactions are pretty cheap on the blockchain. So super cheap and super fast. So if we take a look at the markets, most of XPL is bought on centralized exchange. Actually, it's pretty much all bought on centralized exchanges right now, which I don't really love. And hopefully they start adding support on decentralized exchanges on chain. But right now you can buy it on Binance and on Kraken and on Femex, on OKX and all these other ones here. You can buy it basically crypto.com and Bybit and all the popular centralized exchanges except for Coinbase and Gemini. They haven't listed them yet, but I'm sure that's short coming soon here. But if you don't want to buy it on chain, if you don't want to buy it on a centralized exchange and you're kind of like me, you could just go over here onto Stargate and you can bridge it over. So if you go to Stargate, you can bridge over something like ETH on Arbitrum over to XPL on Plasma, and you can bridge some over. There's going to be high slippage. You're going to lose some value on that, but since we're only sending over $10, $15 or whatever it is, something really, really small, I personally don't mind paying a few bucks, losing a few bucks in slippage, just so I can interact with the chain. And then I do the same thing. I did the exact same thing when I wanted to bridge. I put USDT on Arbitrum right here, and I bridged to USDT on Plasma. And it takes seconds. It's really, really fast. It's it's very inexpensive for a bridge. And then boom, you got money over on Plasma. So once on Plasma, I came over here to the Plasma app here. And the Plasma app has right here this lending vault. It's paying 21% at the moment. And it's apparently deployed into Aave and audited through Veda's audited vault infrastructure. This is a high risk play for me because it's brand new. So I'm only going to really put between 2.5% and 5% in this. Normally my high risk positions are capped at 2.5%, but I'm putting a little bit more in it because it's being deployed into Aave. So I'm kind of like I'm in my head grading these like anywhere between low and mid risk to mid and high risk. And so I'm kind of sizing them a little bit differently than I normally would. Here's another one that I put into, right? So here's 16% being paid on Aave right now. It's got 3.78% being paid in USDT, and the rest is being paid in wrapped Plasma tokens, which I'm just going to sell, and then I'm going to continue to compound these positions. Here's Euler, also 3 different vaults on Euler, and they're all isolated. So I don't mind putting more money into each of these. I put $750, which is essentially, I don't know, like 3.5% of the portfolio in this. So again, this is a high risk position for me, but I'm putting higher than the amount that I would normally cap it at in, because Euler is a medium risk play, but this is all on a brand new blockchain, and brand new blockchains are untested. And since they're untested, I'm kind of like, this is somewhere in the middle between medium and high risk to me. And so I'm putting a little bit more than I normally would, but look at these healthy APYs. A few hours ago, they were 20%. Now they're dropping a little bit because people are putting a ton of money into these vaults here. So I'm going to keep watching these. If these get oversupplied, I might pull some money out of them. But again, almost all of them are around 20%. And that's looking really, really, really good for every single one of those things. One of the thing I actually forgot to, I mentioned in the sort of overall update, but I wanted to just show you here, like, look at this USDC vault on Avalanche. This is really, really nice looking here. The protocol is paying 35%. You're getting a little extra staked AVAX tokens, 1.15% there, for a total of 23% here. But this is really, really nice. I don't expect it to stay this high. It was, I think, 36% a few hours ago. Now it's at 23.87%. I expect it to come down as people put more money into this, but it's a really nice way to have low risk exposure in Avalanche, and it's just another one of those great APYs that I'm looking at right now. And again, I expect this to drop pretty fast, but for now, and because Avalanche is cheap to use and fast to use, I don't mind moving positions a little bit more quickly than normal. That's the update this week. Those are the things that I've been looking at. I'm seeing really interesting things on Plasma. I expect to see a lot of growth really, really quickly on Plasma. You can see here, take a look at this is the Plasma market on Aave, and you can see here, I mean, like, Plasma is basically just born, and it's got 2.36 billion in this one pool, this one lending pool on Aave. USDE, which is a much smaller stablecoin, has almost $1 billion in it. So these are quickly, I mean, it's just very, very impressive how fast people have put money over onto Plasma here. It's pretty easy to bridge. It's pretty easy to play around over in the chain. Everything works seamlessly like the way you would use any other blockchain. So there's no new learning curve here. So that's what we've looked at this week. Next week, I'm going to come back, like I mentioned, with a little bit probably more of a rebalancing. I got to position more into some take about 5 to 6% from the medium risk portion of my portfolio, and the same thing with the high risk portion of the portfolio, and start to put it over the low risk side. So I'm gonna have to rejudge how I do all that kind of stuff, but that'll be coming on the next week's update. So have a great weekend. Hopefully these APYs are juicy enough for you and enticing enough for you to kind of take a look at and a peek at. And until next week, I'm the Stable Lad. Stay stable. I'm the Stable Lad. And if you like today's video, please hit that subscribe button. Every week I break down what's happening in the world of stablecoins and why it matters, clearly, calmly, and without the hype. This channel is for educational purposes. It is not meant to be financial advice. So always do your own research and manage your risk wisely.